Hi guys, I'm Flo. In this video, which I expect to be around 1 hour long, I'm looking forward to share with you some insights and statistical data from a deep dive study I did recently on the Episodic Pivot Setup. I hope you will find this information useful, and I'm looking forward for your comments, insights, feedback, and your thoughts on all the knowledge I'll be sharing, the classification I came up with, and some ways on how to trade EPs. I really hope that I will be able to present the data that I found in a good quality way, and you'll find this useful because while doing this deep dive for myself, I found this as super good quality information. And it changed totally the perspective on how I understand the EPs, the behavior of EPs, and how to trade them moving forward. So yeah, let's move on. It's not moving. Let me click on it. Okay, so the presentation itself is structured as a PowerPoint with 1058 slides, but none of it is presentation. A lot of them are print screen. So overall, what you will find inside is, in part 1 are the EP deep dive results. Starting from slide 3, it's what I found out and the statistics that I came up with while studying the episodic pivots. Part 2 represent the EP classification and trading strategy. It starts from slide 18. I expect this will be the second half of this video, which contains very interesting information and very nice classification, in my opinion. I hope you'll like it, and I hope you'll find it useful, but stay tuned for this part 2. And then part 3 represent the print screens that I did while doing the deep dive. In the end, I found a total of 1018 episodic pivots for a period of 6 years using the TC2000 software, and all of those are represented here and classified in a specific way. Stay tuned and I'll share with you more details. Before going into what I found, I wanted to give a short definition of what an episodic pivot is, or also you heard me calling it an EP. I found out about the EP as a setup from Pradeep Bone, the founder of stcokbee.biz. He's the person that described it and gave a good definition of it. So based on his understanding, an EP setup happens when a neglected stock has a significant catalyst. This is a super important element. There is a catalyst that goes into the stock, which completely changes market value and trajectory of the stock. Catalyst can be triple-digit earnings, government policy, management change, natural event. So and then another person that gives a good definition of the setup itself is Christian Kulamagi, who learned the setup from Pradeep Bone, or Easygoer as well, but fine-tune a bit the definition. More or less it stays the same, but it has a personal twist. Based on Christian's opinion, an EP is when unexpected good news hits a stock, especially if the stock is neglected, that can trigger multi-month and multi-year moves. An EP has a gap up of 10% or more. This was super important information for me when doing the deep dive. I'll share more details in a bit. And then, I'll let you pause the video and look through the rest of the information and maybe read it more accurately. And I highly encourage you to check this Kulamagi's website. Very good information on the EP. There are good articles about it. And of course, on stcokbee.biz, there is also good training and good articles on how to trade and what is an episodic pivot. Yeah, I'll move on for now. Just explaining a bit the chart. This is how an EP shows. So on the charts, a neglected stock, more or less, and then the catalyst comes, which trigger a significant move up. In this case, it's 25% move up, and then a continuation for a couple of days, weeks, or even months up, which may result in a significant profit if you can identify and trade the EP correctly. To study the EPs on my side, I did a deep dive. And this kind of technique of studying consisted of trying to go into using the app TC2000. I tried to study the historical data of a specific group of stocks, and then in the end, what I ended up kind of doing was I tried to see what a stock does after it gets up 7% or more on the daily chart. So Christian says an EP is something that does a 10% up move. On my side, I tried to go slightly lower from 7% up, because in some situation I saw even 7% gappers that did a good move after. And I will share more insights later on where I ended up with those data. When studying the stock, doing the deep dives, the universe contained the US stocks ADRs above $3, excluding biotech and ETFs. So that was what I have for the study. And here is how it looks in terms of numbers. I studied a total of 3,249 stocks. I found 1,018 EPs. And also there was an additional classification when doing the study based on market cap. So the stocks were grouped as below 10 billion or above 10 billion. And I tried to see if there is any variation in these two groups as well. And I will share more data a bit later. The following information was recorded for each EP. Percentage opening EP day compared to previous day close. So this is what I try to track, is how the stock moves compared to the previous day closing. So it's actually this green line move, so to say, from previous day closing till the opening of the EP day. The next point was percent closing EP day compared to previous day closing. So it's actually this move up made by this orange line. So from previous closing till the EP day closing, it's plus 39%. Of course, having these two numbers, I could see and statistically evaluate what the stock did in terms of percentage during the EP day, which is also something very insightful, and I'll share more details soon. What else did I study? Day in which the stock goes below opening of the EP day. So for me, I tried to see what's the behavior of the stock in this area, because most likely here will be my stop for when trading the EP, and I tried to see how the stocks challenge the opening of the day and challenge the low of the EP day. So how the stocks behave compared to this green line. So opening of the day, you see it gets challenged the second day after EP. But then, and how it goes when it goes below the low of the EP day. In this case, the tail is small, but sometimes it's kind of longer. And when it goes below or this line gets challenged. So I tracked that and I counted when this interaction happens. Then another point that I try to check and track is when the stock makes the highest profit day. If the stop is at there is a specific way how I define here the stop, but mainly what's the highest profit day. In this case, the highest profit day here is this candle. So I did that to answer the question on how long, when is the most profitable day to go out of a stock, so that I can be able to define a strategy to close the position. And then last thing I did is to try to track day in which the stock goes below the 10 days moving average. So this is the 10 days moving average, and you see here it's surfing very nicely, but at the moment it goes below it. So this is the day in which it goes below. So I track this for every EP I studied. I track this day in order to understand how this interaction takes place, because I try to see if the idea of making trailing the stock below the 10 days moving average could be a good idea. This is also what Christian Kulamagi suggests, is to trail the stock below 10 days moving average. So I try to confirm this assumption as well. Okay, I hope you're excited to see the findings. Before going into what statistical data I found, I saw that when studying the EPs, there are a couple of important events happening and I try to see what's happening there, but also try to give it that area where the event happens a name, so that I adjust my strategy when I come to that area. So of course, pre-market is an important area. EP day 0 is an important area of events. So I will track and describe this. Day 1, 2, 3, 4, I saw that in this period there's something interesting also happening with the EP that can influence my strategy, so that I define this as an event, and then me trying to approach this event with specific strategies based on the statistical data. And then day 7, 8, 9 is another event, so to say. It's when it crossed 10 days moving average. That's why it kind of, most of the times, and that's why it kind of became an event. And in the next slides, I will try to go one by one in each of these points to show you what I saw based on these statistics and after summarizing the data. Of course, all starts with the catalyst. That could be earning results, breaking news, government policies. The catalyst for the EPs in most of the cases is in post-market or pre-market. And this is where you can start seeing the EP. So the pre-market is important because this is the first moment where obviously where you can see that something unusual happens in the stock, and it's where the EP can be identified first because of the traded volume, the move that it happens in the pre-market. So basically someone knows something about that, or a group knows something about that stock, and it starts to show an unusual behavior. You'll see a little bit later that entering a good quality EP in the pre-market can be a significant edge. This is a chart that shows EP opening range. So what you see from this is that most of the stocks open at 8% or more. That's why being the stock early in pre-market, when this stock is kind of growing up and taking its energy, can be an edge. For example, for a stock that opens at 16%, if you enter the stock when it's at 9-10%, it's already a very significant edge. That's why being there in pre-market is a very good news, and we know most of the companies present in post-market or pre-market their earnings, and the earnings are, of course, one of the most significant controllable catalysts that you can find. And that's why it's very highly recommended to have a pre-market strategy on identifying stocks that gap up, have an unusual volume, and so that you can enter there earlier. What is EP's opening range? So we come from pre-market to the trading hours, and in what I saw based on after summarizing the data is 43% of EPs open between 8 and 30%. Christian says an EP is 10% or more. Indeed, but there is also a significant number of EPs that are kind of between 8 and 10%. So in the end, for myself, it's not to question Christian. He's way more experienced than me. But on my side, I'm like, okay, if there I see a 7 or 8% move, it already can be an EP. And in most of the cases, half of the cases, 8 to 13. And there is, based on the statistics, there is another opportunity here. Like there are a lot of stocks at 30% or higher. So entering them early can be a very nice edge. Okay, then I ask myself what the EP does after it opens, how it behaves, and what I could expect based on the statistical evaluation to see how strong is the power to go up or down and so on. Does it make a tail? What's the behavior there? Mainly I try to see, is it going down? Is it staying within a specific range, or is it going up? You can pause the video and evaluate the table in more details, but I studied them when they go down within a range and what happens there. But to make it kind of short and to the point, what I see is that after EP open, like when the EP start trading during the day, in 11% will go below opening by end of the day. And most of the EPs that go lower in the opening day, they open at 14% plus. So yeah, overall, the risk of entering EP at the beginning of the day and ending up in the EP day at a loss is 11%, which is kind of not that bad. A lot of EPs stay within a range, so 35% will close within plus minus 3% of opening range. They could go up, but then still get back and close at around 3% of the opening, so it's 35% of them, and a significant amount of them, like more than half, will go up more than 3%. Which means that if you enter the P at the opening and you stay there, you're not taking out during the day, it's high chance that you will already make more than 3% profits on this stock in the EP day. Seeing this data gave me the confidence that if I enter early, in a lot of cases, I should be kind of safe in terms of not losing a lot of money. Deal. Then other things happening during the EP day is the volume. It's an unusually high volume. So volume the EP day is 4 to 20 times higher than the average. You can see that in almost all the charts. It is a way to confirm that what you see is an EP. Within the first 30 minutes after opening, the stock is traded more than the average volume of previous full days. So you see this high interest, the catalyst, and unusual trading volume that could confirm you very soon that you are seeing an EP. Okay, so that was the EP day, and I described a bit of what happens there. The move that happens in the EP day and how the volume looks like. Again, pause the video or go back and try to study those data in more details, because it will give you an understanding indirectly on how to trade those and how to behave when you see those EPs. Next point where a couple of interesting things were happening was day 1, 2, 3, 4. And this is where I kind of call them these days the days where the market tests the strength of the EP. And I came up with this kind of idea based on the statistics that came from what I was collecting. So I was trying to see when the market is testing the opening of EP day. So this is the level of opening of the EP. So in this case, the first time the stock tests this is day 1. So that's what this graph shows actually, that in most of the cases in day 1, 2, 3, 4, so in 45%, let me click. So in 45% of EPs, they will go below opening the first time in the day 1, 2, 3, 4. That's why I call it an event day, is because a lot of cases, like almost more than half, will get below the opening in day 1, 2, 3, or 4, with day 1 being at 30%. So as soon as an EP happens, it's very highly probable that it will go below the opening in day 1. Okay, and then 40% of EPs will never go below the opening of the day within the 20 days period. So when counting and doing these statistics, I try to say I stop counting after 20 days. So if I did that later, I kind of don't care. But for the 20 days, how to read this data is that in 40% of the cases, which is a significantly high amount, a stock didn't challenge the opening of the day. So if your stop will be here, in 40% of the cases, you will not be taken out, which is statistically a very nice number to see. Okay, the next point of kind of resistance or of a level to study was test when the stock tests the low of the day of EP day. So this is the EP day, the low of the day is here. So day 2 will be the first time the stock tests the low of the day of EP day. And what we see here is that in day 1, 2, 3, 4, this drops to 25%. So how to read this is actually when it comes to stocks that there are 45% of the cases when the stocks challenge the opening, but they don't go lower in day 1, 2, or 3, and so on to test the opening. So it's kind of, this area becomes a good area of resistance for the EP. So 25% of the cases, they will test again the low of the day. And in 56% of the cases, they will never go below the low of the day within the 20 days period. So a good number of situations when instead of 40%, it goes up to 56. So if you enter the stock early and you can afford to place the stop at the low of the day, in 56% of cases, you will automatically be safe and stay in the position for the next 20 days, which is nice insights to know. Okay, so low of the day is a much stronger area that gets challenged only in 25% of EPs compared to opening of the day level, which is challenged in 45% of the EPs. So an insight looking at this statistic is that 1% below the low of the day in the EP day could be a good area for stop loss. Let's move on. And next event was defined as day 7, 8, 9, and I will tell you now why. So exit from an EP if you trail based on 10 days moving average. So I ask myself when the stock is interacting with the 10 days moving average, and you see that based on the statistics, day 7, 8, or 9 is when the 10 days moving average catches up, and there is an interaction happening between the stock and the 10 days moving average in 53% of the cases. That's why if you trail the stock using the below 10 days moving average, it's a high chance that you will be taken out in day 7, 8, or 9. And you can pause and see how the stats look for other areas of the stock. The next question I asked myself was in what day I should go out of the EP to keep the highest profit. I call this the highest profit day, HPD. And here's what the numbers show. Day 0 came as in 23.6% of the times, almost a quarter of the times of all the EPs traded. If I'll go out of this stock in day 0, it will be the highest. I will maintain the highest profits compared to the other 19 days. That's where they're at. I was stopping to count at 20. So this is kind of, I was surprised to see this, to be honest. As I expected that this area of day 5, 6, 7, 8 will be more relevant for the profit, but actually what happens in a lot of situations, EPs fade or they go sideways, and the highest profit is the high of the day day 0 or EP day, and then 32% of the stocks have their highest profit day is day 1, 2, 3, 4. So here's kind of an insight again after the deep dive is that the highest expansion, enthusiasm, and range can be seen the first day. Later, the EPs can be choppy, harder to trade, or fade. That is why the trading strategy needs to be adapted to capture this expansion, and in half of the situations go out of the EP within 5 days. I'll let you pause and think about this on how this can influence your trading strategy, but to me it was a nice insight. Next, what did I do is, so the panel of 1018 EPs was reviewed to see any common characteristics in behavior within the first 10 days in order to find a way to classify them. So yeah, I asked myself, are they all kind of the same? Is there a way to classify them? Do they behave in the same way? And I was super surprised of the way the data was arranging itself after I started to look through the EPs. And I found 3 distinctive behaviors which led to their classification, and I was super happy to see this happening. I was surprised again how data was unveiling itself. And it was kind of mind-blowing. I was like, really, this is happening in these EPs, and I couldn't see this, and I didn't see any other trader as of now, I don't know, it's mentioning this type of classification or clearly well-defined behaviors. So here's what I kind of saw. There are EPs that have a sharp change of direction. They show a sharp change of direction that looks kind of like this. A couple of days up and then almost 180 degrees and turn around and move back. It's a very sharp move. It happens not so often. So 13% of the total of 1018 EPs behave like this. Sometimes this move is sharp up then down, or sometimes it's a significant move up, which as soon as the stock opens, it falls down. So it's again a sharp change of direction. And because of this sharpness and changing their mind, it's kind of the stock goes up and then gets scared and changes its mind. I call these EPs as chickens. Okay, next one. So they kind of chicken and they go up. So yeah, to me, these were like, it's a chicken behavior. Yeah, you're chickens. Next type of moves I saw was a sideways move. So again, I thought most of the EPs just kind of continue to move up, but the data was surprisingly telling me something else. And in 57% of the cases, a lot of times, just a lot of time, 57% of the cases, the stock does a kind of a good move up in the first day and maybe next couple of 2-3 days, but then it starts to go sideways and there is kind of nothing happening there. Because of this side move and nothing happening, I call this spots as and EPs as duds. Suddenly duds, and there are a lot of them, 57%. Okay, and then I also saw the steady move up. It's a beautiful, steady growth, step-by-step, move up. And this happens more often than I expected. I thought these moves happen way less, or at least they happen in the last 6 years quite often. A steady move up, and because of this beautiful takeoff and steady move up, I call them swans. They are kind of flying confidently, not challenging so much the day 0, pretty good linearity. So yeah, I call them swans. So here it is, a classification that gave me a good understanding. It's kind of a bit funny. It's also kind of, okay, this doesn't sound so serious, but because I gave them these birds things, indirectly easy to memorize, but also these birds have an intrinsic behavior that is also like, this is kind of a chicken. So if you saw a duck and how it moves, it's kind of, they just move like this. So yeah, I think after looking at this presentation, you kind of never forget that this kind of type of setups exist. And I hope you like this idea. So, okay, this is how I came up with this classification. I was super happy to see how I came up with this. And this was kind of promising because 30% of them are swans. And that's nice to know that if I enter in day 0 and then see they do such a move, that's a good hope that I can make some profits trading swans. So how I find them. Just a short stop for you to see how these EPs behave in the area below 10 billion and above 10 billion. Was there anything unusual or something that happens there? So here it is. Of course, the stocks below 10 billions have a little bit more chickens than the ones above. So those are the ones that go up and then change their mind. So those stocks are way undecisive. Maybe the company is young, and it's easier to move it up significantly. That's why then the market adjusted, and that's why you see more chickens. There were more ducks above 10 million and kind of more or less the same amount of swans below and above 10 billion. This is the final percentage, the average that you see on the screen finally. I hope that's relevant. Then what I try to do after doing this classification, structuring all those 1018 EPs into chickens and ducks and swans, I try to look at their behavior a little bit more as a group and see what's happening there. And this is kind of what I saw. Nothing unusually wow, but still good to mention. So chickens, not so many of them, but here they are, going up, down, up, changing their mind, down, up, changing their mind, down, up, chicken, down, up, chicken, down, up, chicken, down. So yeah, you see them. The behavior sharp moves up for a couple of days, followed by fast change of direction and move down within the first week of the EP. So within a couple of days, they change their mind and just go down. The EP gives back fast the gains achieved in the first days. Significant choppiness sometimes, interaction with 10 days moving average most of the time happens at 7, 8, 9 days. So just maybe to take this one to remind you once again how I calculate this. Day 0 is EP day 1, 2, 3, 4, 5, 6, 7, 8. So the day when it interacts with the 10 days moving average is day 8. Sorry. So in most of the cases, this is when the stock interacts with the 10 days moving average. Opportunity for profit due to its aggressive move up. By the way, there is a bit more aggressiveness than usual. In the first days, there is a significant move up. The chickens, they kind of are seriously going up. So sharp move up is there. So due to this, there is an opportunity for profit in the first 3 days and opportunity to short from the 4th day onwards. As soon as buying power is exhausted, to me, I assume that specifically the chickens are those stocks that some professional traders, day traders, short aggressively after the day 3. So they kind of wait until the stock exhausts itself and then they start shorting here or here or here or kind of here somewhere, and then they short it. So the chickens are tradable on the long and then on the short side with a good opportunity and significant range. So yeah, let's move on. The ducks, they move sideways and there are a lot of them, and this is how the chart looks. A little bit move up and then sideways, and then sideways, a bit of up, sideways, up and down and sideways and sideways and sideways. So EP behavior, that goes sideways. A choppy sideways move, sometimes it's not that choppy, but it can be linear, but it's a sideways move that can be quite annoying, and there are many dots. The sideways move makes it difficult to trade the EP. It's also hard to define a good stop loss as you can be taken out easily. Some stocks move sideways relatively flat with small intraday variation, and some in more wavy moves, creating a sideways channel. Well, it's kind of here. This comment is about the fact that here you see it's a wave and it kind of goes in a channel. Here is a more wavy move and it kind of starts to create a channel. Here is also kind of a channel, but it's not so wavy. So not so wavy, not so wavy, not so wavy. You just buy it and it stays sideways and super annoying. Interaction with 10 days moving average, same as chicken. So day 7, 8, 9 as an event. Opportunity for profit the first 2-5 days due to the momentum in the stock until the dot gets into the sideways channel. Sometimes, not all the dots show this opportunity, but some dots do. This one, for example, if you entered here, the first couple of days give you an opportunity for a growth due to momentum. This one also, it goes up in the first couple of days. So, but look at this one. So almost no money here, no money here, almost no money here. Yeah, I hope you kind of figured out. You can see the deep dive on the DAX print screens, all those 57%, and you'll, as soon as you see them side by side, around 100 of them, you'll kind of figure out what these comments means, and you'll learn them super quickly. Swans, 30% of them, that's cool, and these are they. Beautiful move up. Beautiful linear move up, nice gain, like nice profit opportunity here. A bit choppy, but beautiful move up. If you enter day 0, you're safe, and nice surfing also of the 10 days moving average. You see here an example when in day 1, 2, 3, 4, it's a kind of, I define it as an event area. This is where it's even swans sometimes get challenge the opening of the day, like challenge the stop area. But you see, after they pass this area, in a lot of cases, the move starts to go up and they kind of never come back to this area. Okay, so the behavior, a good takeoff and confident and steady move up day by day. These are beautiful EPs. The move up is linear without big risks to be taken out if you trade in day 0, if you enter in day 0. If the stock was choppy in the past, it can go up with choppiness, but most of the time the move remains linear. Interaction with the 10 days moving average later than an average EP with crossing at 10 days or higher. So because the EP is surfing the 10 days moving average in a lot of situations, so trading with a 2% below MA as a stop loss can be a good idea. Because the EPs are so good at, the swans are so good at surfing this 10 days moving average. You see it here and here and here. For example, this one, if you always stay 2% below the 10 days moving average, then there is a high chance that you'll be taken out of the EP, like kind of here. So it's a nice move. Again, if needed, you pause the video, go back and forward to read the comments. But yeah, these are the findings based on the behavior. But then there is another big insight during the deep dive. The name of the game when trading EPs is to find swans. You want to find these moves because they are nice, profitable, they are linear, there's not so much drama happening here. So when it comes to EPs, you want to be in one of these. And learning and knowing this insight, the next question I had was, is there a way to recognize a swan in the first days of the EP? Because from day 0 or 1, 2, 3, 4, you don't know yet if it's a swan or not, but are there any clues that could show that maybe this is wrapping up, it's an ugly duck, but could be an EP, as one. Here's what the data shows. See, so what I did is I took those, it was around 300 swans, and I tried to see how they behave, and I tried to track these numbers of the opening and how they challenge and so on. And I try to see what those statistics tell me only about swans. This data is not applicable for all the EPs, but only for the swans. 60%, 65% of the swans do not test, go below the opening of the EP day from day one onwards. So 65% of the swans look like this, where the opening is here and day one onwards, they don't come back to this area, which is a nice insight. Knowing that day 1, 2, 3, 4 is an event when the EP tests the area, if it doesn't even come to test it, it's already an insight that it may be a swan. 89% of the swans do not test the low of the day of the EP day. So an even higher amount of the swans don't even come to the low of the day. Here it's a very tiny tail and low of the day, but sometimes it's kind of longer tail, and 89% of them don't even come to the low of the day. So if you prefer to have the stop loss at low of the day of the EP day, in 89% of the cases you will stay in the position and be able to have keep trading as well. 88% of the swans do not test the opening from the 5th day of the trading onwards, meaning there is a bit of turbulence at the testing in the first 4 days, but after they take off, it's a steady move. So what this comment kind of means is, like, in the day 1, 2, 3, 4, some of them come back, and if you have a small loss of 1% and it kind of comes back and it takes you out with 1% loss, but as soon as it goes back up, you get in the position again, then if you kind of survive and track it, so you take me out, I can come back if you go up. After day 5, if this happens, then the stock in 88% of the cases, if it's a swan, it never comes back to this area. So the first 5 days, and we will see that later a bit again, is the first 5 days of the EP shows a lot of clues on the swans itself and how to take profits from chickens and ducks. Okay, 94% of the swans do not test the low of the day of EP day from the 5th day of trading onwards. Let me read it again. 94% of the swans do not test the low of the day of EP day from the 5th day. Okay, so from here, day 5 onwards, if you kind of put it at the low of the day of EP day, sometimes it's kind of challenges, but as soon as you are there and you put it in 94% of the cases, it will not come to that area. So it's kind of you stay in the trade for a long time. Let's assume a kind of dream situation, ideal situation where I see this EP in pre-market and I enter at 15% or 20%. And I keep the low of the day at 1% below the 20% plus 20% thing. And then the stock behaves like this. Then I will not be challenged at the my stop loss, and it will stay like this for a lot of times. And then sometimes, so yeah, it's not that difficult to trade. And sometimes the low of the day is kind of lower and there is a tail. But if you can afford, if you're convinced in the catalyst, it's a good market environment, good situational awareness, and you can have a position size that can afford to have the stop loss at the low of the day, then it just will continue to go up. In 94% of the case, it will not take you out. Deal. So 83% of the swans touch the 10 days moving average after 10 days from the EP day or later compared to the chickens and ducks who interact with 10 days moving average most of the time at 7, 8, 9 day. So chicken ducks, they interact with the 10 days moving average in the 7, 8, 9 days area. The swans obviously surf it more. So if you see a surfing by day 8, 9, if you see that it's kind of confidently kind of moving up, it's most likely a swan. But yeah, there are also some kind of ugly situation, as for example this one, where the swan kind of went down significantly lower below the 10 days moving average early in the state process, but yeah, this is what the statistics shows. I encourage you to pause the video, take your notes, and try to read every bullet point and see how you will behave knowing this, because to me these are good insights that can define your EP trading strategy. Okay, a short summary on what we know so far based on data. So we studied stocks below 10 billion and above 10 billion. And we have a total of 3,249 stocks, and 1,000 were identified, 1,018 EPs. And what we see between these below 10 billion and above is that when it comes to above 10 billion, there's 33% less EPs, but still there are some. And yeah, above 100 billion, there are not so many, and there are also not so many companies above 100 billion. So that's why I didn't even add that classification. So yeah, above 10 billion, there are a little bit less EPs, but still there are some. So a total, an average per month of around 14 EPs for the last 6 years, which had some crazy moves and bullish markets. So this is also something to take into account. Then, based on the data and the classification that you already know, there's chickens, ducks, and swans, and here it shows how they are below and above 10 billion. We stop at this, and this is how they are based on the, like, what you can see per month. On average per month, you can find 2 chickens per month, 8 ducks, and 4 swans. What's nice about this column is that there are still 4 swans to trade, so there is still worth based on how I found this data. I was also surprised to find so many swans, to be honest, but it's kind of still worth, even if you are a working person, to trade this setup and look for swans and study the earning season and so on, because there is some good opportunity for profits based on episodic pivots setup. Okay, just a reminder, it has US stocks ADRs above $3, excluding biotech. I think this number will be even more crazy if we take biotech, because this is an area that with significant EPs, but yeah, I just wanted to take it out. And then ETFs. Deal. Okay, so based on the data you know so far and the deep dive analysis, I think you will at the moment ask yourself the same question. You saw that the swans behave nicely, and in 30% of the cases there are swans that are profitable, but there is then a natural question that comes next is, can I make money trading chickens or ducks? And then I took all those EPs, around 700 of them, of chickens and ducks. I looked at the charts and I was asking myself always, will I make money being in this EP, and when, and is there any way to make money here? So, and then these questions open a totally new perspective to those numbers and data, which I was also again surprised to see, and I find it super useful. And this is what happens. I hope you are curious now. So, what happens is that 282 of the EPs, of the total EPs, so there are in total 1,282 of them, or 28% of them, or around 4 of them per month, are exhausted EPs. They fall after EP day, go choppy being hard to trade, or go sideways without giving any opportunity for profits. So chickens or ducks, they can be chicken or duck, but it's an already exhausted chicken or duck. There is no way to make money of them. I don't know out of these 4 how many are chickens or ducks, but they are. But what I know is 4 of them per month are exhausted, and there's no money opportunity there. The catalyst is most likely priced in already at the moment where you'll enter it, and you'll just sit there and make no money. Okay, then there is 433 of them, 42% of the total EPs, and it's kind of 6 of them per month, which I call them average EPs, and they have opportunity to make money, especially in the EP day or the first 3 to 5 days after the EP, due to the momentum that is still there following the catalyst. So how I look at this then is like, okay, there is still some chickens and ducks, 6 of them per month, where I can make money in the first week of the EP, so in the first 3 to 5 days. Okay, I learned that, thanks. And of course, there's the swans. I keep them swans as always. It's 30% of them, 4 of them per month, which give a nice linear move up. Okay, knowing this and asking this question, restructure the data in a new way, and this new way looks like this. Now, when seeing an EP in the first day, so tomorrow you will see the earnings season, and then there will be a stock of 7% or more in pre-market. This is what you could expect. In 28% of the cases, this is an exhausted EP, chicken or duck. So whatever it will be later, it will go up and down or sideways, but most likely it's an exhausted chicken or duck. In 42% of the cases, this is an average chicken or duck that could give an opportunity for profit in the first 5 days. So, okay, relatively high number of cases when the EP is still tradable in the first week with 42% chance, and it's an average EP. Of course, you have to have good entry skill, daily skills to trade this, to be able to take profits. But this is happening, and of course 30% swan, so overall 72% of stocks tradable in the first week. And in some situation you have to close fast because they are average EPs that could fade possibly very soon. Okay, then another logic question when seeing the data was, in what day I should go out of the EP to keep the highest profit? Because the stock go up and then down and maybe continue up and so on. And the question was like, okay, when is the HPD, I call it HPD, which comes from highest profit day, when this day happens? And to define the highest profit day, let me hide this for a while. To define the highest profit day, I assume that the stop loss will be the low of the day of the EP days. The stop loss will be here, like 1% below the low of the profit day, low of the day of EP day. And when it comes to day 1, 2, 3, 4, when the testing happens, every time if it will test the stocks and go down, I will be taken out at 1% below the low of the EP day. And then when the stock will go, the assumption is that when the stock will go up in this one of these 4 days and cross again above the EP day, the low of the day of the EP day, I will buy it again. So the first 4 days, every time you'll take me out, but if you go up, I get back. And then the assumption is that after that, I will trail it until it crosses the 10 days moving average. So from that moment onwards, I trail it, go move the stop loss up until the 10 days moving average. And we know that most likely day 7, 8, or 9 will be when it will cross it, and this is when I could expect to be taken out. So having these conditions, what's the highest profit day? Here it is. The statistics shows the following, that day 0 in 23.6% of the cases is the day when the highest profit is there in an EP. Then day 1, 2, 3, 4 is in 32% of the situation the highest profit day, meaning the profit in a stock in an EP in 55% of the cases happens in the first 5 days. Let me see what I wrote here. The highest expansion, enthusiasm, and opportunity for profit can be seen in the first couple of days, with day 0 being in 23.6% the high profit day. And then I hope this is visible on the screen, but from day 0 to day 9, so from here to here, so this is actually the explanation of this square. Like what you see is from 0 to day 9, in 83% of the EPs, the high profit day is within this period. So, and this is counting a 20 days range. So if you don't want to keep a stock for more than 20 days and you want to trade an EP, then the day when the opportunity of highest profit day will appear is within the first 10 days, which means, of course, these are most likely swans, so which means there is a kind of, you need to react relatively quickly when trading EPs, and don't think that you have to stay in it for a very long period, because most likely the profit is there in the first 10 days. So again, I let you pause and think about this, and knowing this information, how you will trade the EPs moving forward. But this was, again, a cool insight, and I was happy to ask myself this question and to collect this data and come up with these tables that are, to me, relevant to learn about this episodic pivot. I hope you're still with me, you're not getting bored, and we move on. There are a couple of slides more to go. Learning and looking at all these statistics and how the stocks behave, I saw that EP's trading strategy has a significant polarity, and I hope you saw it by now yourself as well. And I call it hot or cold. What means hot? So for 62% of EPs, it is best to take profits within the first 5 days of the EP. Most of the EPs require you to act quick. So even if EPs, as a general understanding, and in my understanding before the deep dive, was like, okay, EP is a setup where I need to keep the stock for a longer period of time to take good profits. Well, the statistics and the behavior I tracked show me that in 62% of the cases, which is a relevant, significant number, I assume here are the chickens and ducks, it's best to take profits within the first 5 days. And this is the hot area. So now I know that the first 5 days of the EPs could be hot, because this is one of those days will be the day when I need to go out, because this is where the highest profit is. Okay, and the cold strategy is the highly profitable EPs, so the swans, most likely they are here and there, so like the rest of the 30%, require a cool mind and patience for more than 2 weeks, or most likely more than 10 days. So yeah, that was a nice insight and good learning for me. And I hope for you it is an insight as well. Based on this, you understand now that the strategy when trading ESP is you need to expect to be hot or cold, or you need to decide for yourself based on catalysts, how you like to trade it, style of trading, situational awareness, and so on and so on. Do you go hot, meaning you will go out because you know that the profit is in the first 5 days, you'll go out within the first 5 days. And a lot of times, even in the first day, at the high of the day of the EP day is in 24% of the cases, the highest profit day. So you'll even go out of it in day 0. Or you are trusting the stock, trusting the catalyst, you will stay cool and wait for a while to get into those absolutely life-changing EPs, the swans, and yeah, so something to have in mind when trading the EPs. Okay, I hope you're still with me by now, and I hope the data is useful, insightful, and you learn some good, interesting stuff. And you now ask yourself, based on what you found out in the last couple of minutes, you ask yourself, and I ask myself these questions when I am at day 0 of the EP. So let's assume I'm in pre-market. I see a stock with I hear a news that sounds like a catalyst that will move a stock up, and it appears as an 8% plus in pre-market already. So I assume, okay, this could be a catalyst. So the first question I ask myself is this a chicken, duck, or a swan? Then I ask myself, how strong is the catalyst, and is like at the moment when I buy it, is this an exhausted EP already? Because we know it's around 28% of the cases they are already exhausted. There is not much money to make there. Is it an average EP where I can still make money in the next 3 to 5 days, or is it even a swan? So this is something you can already ask yourself, because we saw that the swans show their strength in day 1 or 2. You can already see based on statistics if it could be a swan or not. So yeah, this is question 2. And question 3 is you have to define your strategy. Do I go hot or cold, considering market conditions, situational awareness, and quality of the catalyst, meaning that you will go out of it in the first 5 days, or you'll wait a little bit longer. Okay, let's move on. As software I wanted to share that I use to identify the EPs in pre-market and then watch them later in the day is Trade Ideas. I have a short disclaimer. I don't have any affiliation with Trade Ideas when recommending this software. I use it daily. I found it super useful. So what Trade Ideas has, and I'll try to add them this top lists on in a link here so that you can download even these 2 top lists. They are not made by myself. I also took them from a trader, so I don't remember the source, but what this top list does is shows a stock that has all these stocks are having earnings in pre-market, or had it like in pre-market in the day when I do the IM trading. So all these stocks show, and what I see here is that ASML has a 5.1% up compared to the change, like close of the previous days, meaning maybe this stock, and I also see other parameters that could be interesting for me. But what this data shows to me, and it's also color coded, that this stock could possibly have a significant catalyst that is building up and could result in a nice EP. So of course it will grab my attention, and I will try to follow it closely in pre-market, but also during the day. To create this top list, this is the configuration. So earning date, you need to put between 0 and 1 to get it for the day when you trade it. Then I'm interested in stocks above $3. It's some personal preferences. So you see, you can pause and read the summary as well. So this is the top list for what is trading today, in the day of the trading. And then I have another one that is tracking the same thing, that's volume leaders reporting soon. So when I say soon, is the next 5 days is defined by this filter, earnings day 1 to 6. So the next 5 days of trading, I don't know why, but here I have 1 to 500, so I'll have to correct this, but here's the summary. And these 2 top lists tell me, and why I keep this one is because it shows some maybe unusual volume prior to earnings that could maybe show some higher interest or some kind of expectations or something, some rumors going on. So that's why I kind of want to have this in the loop to see if there is anything unusual happening in the days before earnings are announced. Yeah, based on this configuration, you can do that in Trade Ideas. I find it super useful, highly recommended. No affiliation with Trade Ideas. Okay, so key takeaways. I'm wrapping up the presentation. I hope it was not super boring. 5 minutes max to go, and that's it. Sorry if in case it was boring. So, key takeaway number one, the number of EPs is significant. I was also surprised to find so many of them, with an average of 14 per month and force once per month. That's nice numbers to see. Just have in mind the last 2 years were very bullish, so higher chance of EPs, but very nice numbers. Pre-market and entering early can give us an edge when trading EPs. That's significant. This is why being pre-market, following those earnings is important. It's highly advised by Pradeep Bone as well on stcokbee.biz. So if you want to learn more about it, I highly encourage you to get to that website and check more. But yeah, pre-market and entering early can give an edge. So that's one of the conclusions. Opening and low of the day in the EP day can be a good stop loss. We saw that this area can be challenged in day 1, 2, 3, 4 in most of the cases, but you can, if you kind of follow closely that, and every time if it kind of takes you out, you go back in when the stocks decides to go up again, then this can still be a nice area to have your stop loss. And still in most of the cases, you will not get challenged in that area, and it will be a nice trade to do. I hope you like this classification. I came up with about 3 types of EPs, and this clears a little bit their base of their behavior. Chickens, ducks, and swans. It's something that's based on like reviewing the data. I kind of creatively came up with. I found it super useful for me. I hope it's useful for you too. 3 types of EPs based on profit opportunity. So can I make money out of chickens and ducks and so on? So exhausted, average, and swans. This is another perspective, and I was happy to find out about this as well. And last one, EPs require some good technique and skill, especially in the first 5 days. The first 5 days are unusually intense with events. This is when most likely are the days when the highest profit is. This is when it's most likely when you will get challenged on your stop loss. This is where this EP does significant moves, when chickens change their minds, and so on and so on. So especially the first 5 days, significant technique, I would say. And yeah, my hope is that you'll just find the swans and be millionaire. But yeah, a couple of conclusions. You can download the presentation with the full list of 1018 EPs on mastertradingflow.com. So yeah, like as I told you, here is how it looks. The presentation moving forward is every EP that was part of this database in the study was, look what a nice chicken, like how you cannot call this like as a chicken. So each EP, it has a print screen. On the print screen, as I told you, like there is the lower number is this move from the close to the opening, the upper number. Yeah, this is actually a good point. Sometimes the EP opens and then goes down, so I consider it like this. Yeah, I'll make it as a comment, as a side comment, but that's a good point. But here you see that it changes its mind. Another chicken changing. So you can find all the EPs, all these database I used. Where it can be useful is for you to go through these EPs and learn how they behave, so that you get a better understanding and better to memorize that this is a chicken and how it behaves, and not have this biased understanding of the EPs. You can print them and so on. So if you want to download the full presentation with the EPs and the presentation itself, you can find it on mastertradingflow.com. Thanks a million for your attention. I hope you found this useful. I look forward for your comments and feedback. And that was it. This was Flo, and wish you a great day. Thank you. Bye.